Seeing as it's that time of the month here, and you know I'm not talking about that time with your female compatriot. I'm talking about the time that we're going to be looking at none other than this portfolio. The monthly recap. You already know what day it is. Wahoo! That's what I'm talking about. I hope I blasted your eardrums out. Hot. Oh, God blasted them eardrums. That's just how it's going. Let's just talk about what's going on here. Okay, this is a big deal, right? This is a big deal. Look at the number you see in the top left of your effing screen right now. That's right. I'm getting serious here. Kind of pissing me off how great we're performing here. You're telling me up 42% of $45,000 this year so far? We have now hit 150 grand combined in just the joint and just the individual. This is excluding the retirement accounts, which I don't show you too much of. But again, I'll preach it every time. Very incredibly important to have those retirement accounts set up first and foremost. Priority. If you're a younger individual, those are priority for you. Okay, just being honest. But hey, let's. I make those priority. Okay, I max out contribution every year, and you should too. But we're not here to talk about those. We're here to talk about these two bad boys, our main two accounts we love to share with you every single month. We do it. So subscribe if you love to see absolute transparency every month, because it's what I'm here for, okay? A lot happened this month, okay? We saw the Fed raise rates, and guess what happened because of it? The stock market still kept going up. It kept going up. Isn't that wild? No one would have expected it to happen. You know, that's one thing where we say this is priced in, baby, because there wasn't much of a falter at all. It just kept going nutty. If you look over the last month alone, up $8,300, 5.8% in a month. That's pretty incredible. In a month in which they raised rates, which I think you see when this happened here. And guess what? We just kept rallying afterwards. So let's get into these accounts because there's a lot to go into. You know there is. Stay tuned for the next video. Going to be talking about the dividends we earned this month. It was a pretty hefty month for us. Um, it was a good one. And I know you know this dividend or this portfolio has a decent focus on dividends, as you'll see, and it's why I make a separate video for it because it's really exciting, a little bit easier to digest in this one too. Brought a little water alongside me, a little bit of Splash watermelon flavored, brand new Splash Blast. Sorry, pretty delightful. I'll tell you, it doesn't really taste of watermelon. Tastes slightly more of a honeydew. But I'll take it. So first we start with the individual, the biggin, as you know. And we just go line by line here. We're going to go item by item, tell you how many shares we have, give you our cost basis, give you an opinions if they are relevant at the time. We start off with Apple, and Apple is relevant at the time because guess what? They report earnings here later this week. I've still got my 50.42 shares. Haven't added to this one in a while, and you can really see that in the cost basis. We're talking about $70.27 per share on a cost basis standpoint. I've had this thing for a long time now, and I plan on holding it for a long time. I am up overall $6,332 or $337 or 178%. This makes up 6.8% of the account. It's a massive position at nearly $10,000 of value, and it's one I'll be holding on forever. That's just a fact of the matter. That's what I have for Apple. So then we get into AbbVie. 10.29 shares here. We're going alphabetical, as you know we must. Nothing too wild here. Sorry, I had to clear the throat a little bit. Position worth about $1,500. We are up on this one pretty nicely. Up around $462 or 42%. I've also had this one pretty well since the infancy of the portfolio. If you've been around for a while, we still have those videos available, so you could always check kind of the original. That's what's kind of wild. I haven't in forever, but I really do want to go back to the original and kind of see how things were. Wow, that's some good water. Oh, baby. A little hint of, hint of honeydew, baby. My favorite candle scent, hint of honeydew. But yeah, it's kind of wild to think about where this has come from. Every month I think about it. It's crazy. This thing I started with a few $100, buying Apple, my first Apple share. Kind of wild to think about. Really buying partials back in the day on Robinhood. And I'm here now. Arbor Realty Trust, one of my massive dividend payers, yielding around 10%. Makes up around 2.5% of the portfolio. 201 shares here. This one has had an incredible month, let me tell you. Um, I think this is up somewhere around $4 by itself to start the month on a per share basis, which is fantastic. So now you see, not only have I been getting 10% yield since I've held this one, and I reinvest all of them, by the way. Every dividend I reinvest, so I earn even more. I'm also up $1,000 on this position in terms of capital gain, too. Um, who knows what that dog was doing? I think he just fell on the ground. I have no clue. It was a loud noise. So, really happy with that position and what it's been able to do. Then we get AMD. 15 shares of AMD also reporting earnings this week. This one's been good for me. I mean, there's no denying, up around 36%. I was down for a little bit. It's definitely a newer position for me, so hasn't necessarily partaken in the entire run-up that they've had, so let's be real. But it's still a great performance, in my opinion. I'm pretty happy for it, in and around $82 per share. I think that's going to be great. Definitely a stock that trades relatively cyclical, but I like that for the long term. This company's got to be up a lot higher 5 years from now, in my opinion. Amazon, do like this position, 15.18. Hasn't been performing well for me over the last year. I mean, you saw in our earnings video, the stock's down 2% on a 1-year basis. Pretty poor performance, all things considered, because, look, I mean, I've been in this for about two years. So 12.8% up on the position. So I'll take green any day of the week. I'll take the fact that I'm in the positive, and I don't want to get rid of this position at all. In at $118 a share. Pretty nice, all things considered. I'm pretty happy with the position and where it's at. The throat, every time I start talking, can't be cleared. It's just how it goes. Then we get Apple Hospitality. Another Apple, that's right. Another one that I've had for quite a while. Pays a fat dividend of around 6%, 7%, somewhere around there. 115 shares here, pays monthly 8 cents per share. It's been nice because I'm able to add a couple shares on a monthly basis. I'm able to add a couple shares to this position, which means I get even more dividends. And I'm up in terms of capital on this one to around 14%, $220. I'm not in this one necessarily for that capital appreciation, but it's a pleasure to see that is the case. And on top of the nice dividend, I'm getting this. So, yeah, that's an exciting one. Apollo Commercial Real Estate, another REIT here, 183.8 shares. Another one I own for the dividend. And it's done okay on a performance standpoint in terms of the price of the stock. Has been a lot better. It's been struggling over the last year here, but I am technically up $88 too, or 4%, in at around $11.40. The yield on this one is over 11%, just due to how the share price has fallen over the last year. So I'll take that yield any day of the week, and when that quarterly one comes around, it reinvests for a ton of more shares, and I get excited about it. Activision Blizzard, you know why I'm holding on to this one. I've talked about it before. 15 shares here. We're in for the arbitrage, baby. Up pretty nicely here, about 20% or $200. I'll be holding this till the merger's finalized here, somewhere around the October timeframe they announced. So we'll take a look and see what that actually equates to. But anyways, I believe it's going to be somewhere around the $95 per share range. So we'll see what the actual... Once they finally finalize the deal, I'm hopeful it'll be around that. So I'll be up pretty big on this one and maybe get some extra stake in Microsoft. I don't know if they're just going to do an all-cash deal for the stock or maybe add some partial shares of Microsoft. Hey, we'll see. I'm looking forward to it, though. Really am. Bank of America, one I've been adding on to, as you can see, 49.05 shares. Nothing crazy here because it's a newer position. I'm only up 2%. Really in this one for the long term. Pay a decent dividend in the meantime. They're not going anywhere, and the shares are trading ridiculously cheap, so that's why I'm in Bank of America. Citigroup, similar. Shares trading incredibly cheap, around a 6 PE ratio. I mean, they're giving these shares away right now. Right now, we've got 20.47 shares. I am down on the position, though, around 2.5%, so that's kind of lame. In terms of dividends I've earned, I mean, technically, I guess I'm probably up a little bit, but I'd say I'm pretty flat on the position. Just nothing exciting about this one so far. It's trading ridiculously cheap. Another one I hold for the long term. I don't think they're going anywhere regardless of recession or anything of that nature, which they're lowering the chances of that anyways, so we'll see. Carnival, you know I've got 100 shares here. Might not have 100 shares for long. You see, I've got I've got this one this way to sell covered calls, and you know what? The second I sold the covered calls, the stock went to the moon. I've got a $17 strike price covered call for October 20th. Still a couple months out, so obviously they're not going to exercise against me just yet. I'm not going to get assigned, so I'll still be holding the stock. I think somewhere around that time frame, it's probably going to drop down by then to around 17, and I think I'll be safe and be able to hold on to the shares, but we'll see. I may need to roll out the position if the price of the stock itself happens to fall down. I know it did fall down to 17 not too long ago, but I wasn't quick enough. So yeah, that's kind of that. I mean, it is what it is on that one. We'll just kind of play it by feel. Um, let's see. Sorry, had to send an important message back here. Pretty exciting stuff. Costco, 3.02 shares. Not a large share count here, but again, this equates to around a $1,700 position, which is pretty massive. I'm up big on it too, around 30% or $390. Very happy for how that one's performed, and I'll be holding on to that one, no doubt about it. So then we've got Cisco following them. Pretty boring, 18.5 shares here. It's been a boring one. Kind of one I hold more to sit in the portfolio and stay consistent, earn a little dividend too. 16% upward movement, not too bad, all things considered. About $137 up. Pretty small position, under 1,000. You know, when you look at the grand scheme of the portfolio, less than 1% is definitely a pretty small position. But yeah, that's them. Disney. This one is now my worst position in terms of dollar loss. 30 shares. I'm getting destroyed on this one, right? I mean, I'm down $885 or 25%. Not my worst percentage loss, by the way, but definitely my worst dollar loss. I'm getting destroyed on this one. You know, and the thing is, I'm in at 117 per share. A lot of that came from my original cost basis was a lot lower, but when I combined with my M1 finance, it had a lot higher cost basis. I'm getting obliterated, potentially considering the dollar cost average into this one, but it's just right now I don't know. I don't know how to feel about it, so I don't know what I'm going to be doing here. Yeah. Then we get Domino's Pizza. You know Domino's. This one has been also a bit of a stinker for me, all things considered. It's actually started to turn around lately, which is great, but it definitely was a stinker for a hot minute. This month has been good for it, and I'm excited about that. So we have 4.04 shares here, about a $1,600 position. I am up around 8% or $126, so that's good to see. So yeah, Ford Motor Company, on this one too. What I did this month, and I didn't show it here, did actually buy a put for Ford Motor, which was a $14.35 strike price. Ended up making about $50 on the put itself. I wish I held on to it longer because I sold it around $14 a share, and the thing has been falling like a rock, which has been great for my covered call, by the way. Really good for my covered call, I should say. I mean, I'm excited about that. Considering rolling this to a sooner expiration, because I could probably get a cheaper, actually a pretty good credit on it still if I do a week of expiration. With how low this price has gone, my current strike is a 15, so I think I could probably roll that. Regardless, on the position, I am up 38% by itself, so I'm up big on the position. Cost base is in at 936, so I'm still happy with how this one has been performing and a good dividend yield. I want to hold on to it and obviously just earn some supplemental income with these covered calls. That's why I'm selling them. Gilead Sciences, 15.59, one of the few biopharmas I have. I am up pretty nicely, 20% or $200. It's pretty easy when you got an $1,100 position. It makes it pretty easy for the percentage, so we like to see that. Gladstone. Capital, Gladstone, we got 97.81 shares here. I am up around 19%, but it does bolster about a 9% dividend yield, so I'm pretty excited to have both capital gain and a nice dividend on this one. It's been a good performer for me. Google or Alphabet, I've got the Class A shares. You know I like them voting rights, baby. It's what I do. This one has had a fantastic month. I've got 10.1 shares, up around $379 or 39%. Really great earnings this month, so pretty excited about that. Home Depot, only the 2.03 shares still. up around 45% or $212. So it's a small position, but it's up pretty big, and I'm excited about that. HPQ, HP Incorporated, you know them, 26.95 shares. A bit of value play for a hot minute of mine. I am up around 27% or $190. Also a small position, less than $1,000 on this one too. Hercules Capital, um, a bigger position for me, no doubt. We're talking about 111 shares, around 1.3% of the portfolio, $1,800 worth in this position. I am up here around 17%, and this one, all things considered, by default yields around a 9%, and they also typically offer a supplemental dividend, which boosts their yield to over 10%. So I've been earning great dividends, and I'm up over 10% on it. I'm pretty excited about the performance of this one. I really am. IBM, another one that, kind of boring for me, but I've been pretty happy with the performance. 5.2 shares here, small position. I am up around 25% or $151. Pays a nice dividend too. So, I mean, I'm pretty happy with IBM, what they've been doing. Intel, one that's recently popped a little bit here. I've made back some of the loss I've had on it. I've got 17.7 shares. Now the snot's coming out of nowhere. I don't even understand how this happens once I start talking. Still in at $50 per share on a per share basis for costs. So I'm actually down 27%. Or $244. I was down over 50% on this one before, so I'm pretty happy how this one's kind of recovered here this year. It is a small position for me regardless, though. So, iRobot, this one's been a piece of trash here, too. Still in it for the hopeful acquisition by Amazon. Somewhere ideally around $52 a share. Again, it was supposed to be over $60 a share. They've announced it maybe $50 a share, $52. So that's pretty lame. Only the 10 shares, though, so it is a pretty small position for me. But all things considered, I am down around 22% or $113. I'll be holding it just for the arbitrage potential. Who cares? It's a small position. I don't really want to trim the fat on that one. Iron Mountain been an incredible performer for me. Really has. 60.86 shares. I've had this one for a long time, and I'm up big on it. Up around 83% or $1,600. This is an incredible performer for me, and around a 4% yield on it too, because it's a REIT, right? Focused on that dividend too, so I'm pretty happy with how that's done. I've gotten really the best of both worlds on this one, and I'll continue to hold. Coca-Cola, 14.37 shares, up around $125 or 16%. Another boring company. I hold it to be a rock. Kohl's, I've been pretty happy with the performance as of late here. I was down on this one, as you know, but 88.95 shares. I was trying to get this thing to 100 shares to start selling covered calls, but then it started going up pretty quickly here. As you can see, I mean, we're finally up. It's only 2% on the position, but we're finally back up. Trading at ridiculously cheap multiples and paying a 7% yield. I'm pretty happy with Kohl's where it's at right now. And for the long term, look, the company's not going anywhere. They're performing well, and I think they're going to do great things. So I'll be holding on to that one. Lockheed Martin, newer position, as you know, tiny position, 1.01 shares. I am down on this one slightly, about 5%, so that's been a bummer, but I'll be holding on to that one. Lowe's, 2.02 shares here, similar to Home Depot. Very small position at only $476, but I am up pretty massively, 59% or $178. Really good performance there. Main Street Capital, another big dividend play here that's also gave me some capital appreciation. We're talking about 48.3 shares. I am up about 21% on it at $360, and also bolsters around a 6.5% dividend yield, pays on a monthly basis. Pretty excited about them. Meta Platforms, what more can I say about them? Absolute ripper of a couple months here. I mean, it's been incredible. Now, this position is officially the largest position, as you'll see. Let's see. Yep. Let me see. Oh, never mind. Yep, it is. It is. It is. What? Got not Joe. Don't know where that came from. Been in my position a long time ago. $10,355 on this one. Sorry for the scrolling, make it a little confusing. But as you see, we are up massively on Meta. $4,436 or 74.95%. Not quite as large of a percentage gain as Apple, there's no doubt. Again, I say it sometimes. It is wild to think about if I just put literally every dime of mine into Apple. I would be a lot more rich than I am now by individual stock picking. But hey, that's all right. We didn't want to do that. We like to pick stocks, okay? Anyways, great performance by Meta. I love what they're doing. 7% of the portfolio on this one. Um, it's a big chunk. It's the largest position I own. So 32 shares, by the way. I don't think I mentioned that. And I'm in at a basis of $184 per share. Right now trading at 323, pretty massive. I'm in this one for the future too. Really excited to see where they go. Microsoft 10.38 shares, another one I'm in for the long term, baby. But I am up pretty nice in the meantime. 110% or $1,800. Positions around 3,500 or 2.5% of the portfolio. Love this one. It's exciting to have in there. Micron, been a bit of a stinker. It's an up or down one for sure. Better than it was, good performance this month actually. 10.07 shares. I am up, all things considered, about 57%. It's a small position though, so only about $262 in terms of gain. Neo, I've had this one forever. 25 shares. Sold off the majority of it, unfortunately. Actually, no, not really unfortunately. I sold around the most of it, around where it's at right now, actually, just a couple of years back. I am up 875% on this one because, you already know I'm in at $1.53 a share on Neo. Had this one forever. Um, for a few years now, and really it's been a killer for me, all things considered. Nvidia, really just 6 shares. Let's just be honest here. Around $2,800 on the position, which is massive. The cost basis is quite incredible. So you see, all things considered, I'm up around 527% on this one, which I think, let's be real, I believe the cost basis is inaccurate on this one, and I've said this, really thought this for a while. I don't think this is my true cost basis. So it's going to suck come tax time, but I'm just going to hold this one literally for eternity so I don't have to worry about it until then. Does that work for you? I hope so. Then New York Community Bank, following them, really has been a ripper itself, too. 47.8 shares. Had this one for a hot minute, really mainly focused on the dividend of around 5 to 6% usually. But I am up around 32%. The share's gone up quite a bit due to their recent Signature Bank acquisition. They've done great things. So they've been doing good. I'll be holding on to that one for a little bit too. Realty Income, 53.35 shares. Not great. Nothing crazy to write home about. Only up 3% in terms of share price. Does pay about a 5% yield. It's pretty boring, but it is the monthly dividend company. Continue to reinvest shares on this one, worth about $3,000. I'd like having it in there, earns a nice dividend, and the share price stays relatively consistent. I like a little consistency now and then. Omega Healthcare, 90.53 shares here. Been performing very well here as of the last month. I'm up around 7% in terms of the share price. Does yield over 8% too, so one I'll hold for a while. Skilled nursing facilities aren't going anywhere as people are only getting older and older. Then we've got Penn Entertainment, 25 shares of Penn Entertainment. Down pretty massively, about 30%. The worst percentage loss, I believe, is on Penn here. Down about $285. I'll be holding this one too. From a gambling perspective, I think they'll be doing plenty fine. That's what I'm in there for. So then we've got PepsiCo. 5.13 shares here. Again, one that I hold to be a rock of the portfolio, but they're up around 18%. I'll take it. I mean, I'm pretty happy with what they've been able to do. Plug Power. No, this one's my worst in terms of percentage, I should say. Only 8 shares, so it's a tiny, tiny position, but I am down 47%, or around $92. I've made a lot more than this in the past with this particular holding, but I bought back in around $24 a share, and it just hasn't worked out for me. Prospect Capital, 301 shares. This one, again, pays monthly, 6 cents every month, around 11% yield. Every month, I'm getting around 3 shares of Prospect Capital in terms of dividend reinvestment, and that's the snowball effect. The position continues to keep growing and earning me more and more dividends. It's one I'm super happy for. And you know what? I am down a little bit, about 6% in capital appreciation. With dividends, I'm up actually pretty massively on the position, so I'm okay with that. And each dividend I get reinvested at this lower share price lowers the cost basis. What can I say? I bet a $1,900 position, though. Nothing, it's pretty nice size position, but nothing too crazy. Qualcomm, pretty small position, 5.13 shares. Up around 26% or $142. Rhythm Capital, another REIT here, decently large position, been performing well for me, 185 shares here, yields around 10%, up around $151 or 8% too. So again, we've got the best of both worlds on this one. Continues to reinvest on a quarterly basis. I love what they're doing. Starbucks, 10.2 shares of Starbucks. The S-Bucks themselves up decently here, around 29% or $239. Pretty happy with the stock. I'll be keeping it where it's at. Charles Schwab, great performance here this month, around 15.1 shares. I am up here about $152 or 17%. Been kind of a bum position, but hey, I'm all right with that. Stitch Fix, you already know this one. I actually had to roll this one out, and I just recently did because I had a covered call here at around, it was a $5 strike. Actually, the shares have gone above that somehow. I don't know how. They're very up and down. I'm still down massively on this one. We're talking 37.98%. My second worst position, down $307. But hey, selling covered calls on it. I actually made a little bit of money doing that here as well so far. You know, it's not massive. The premiums aren't worth a lot on these small stocks. But I've been able to get around, you know, a couple extra 20, 30 bucks here, which is just chipping away at that, you know. Really, it's chipping away at how much I'm down on the position, so I'm happy with that. So yeah, 100 shares simply just for the fact that I could sell covered calls. So that's what that's there for. Shopify, 60 shares, another banger of a position here this month. Around $4,000 is what this one's worth now because it's gone up so massively. Do report earnings this week, and I'll be interested. I'm up around 45% or $1,200, around 2.8% of the portfolio. Stanley Black & Decker, 10.3 shares. Kind of crazy. They're priced at exactly $100 a share as of this screenshot. Just take a look. That seems wild to look at there. Up around 11%. Another one I hold just to kind of be a, you know, a rock in the portfolio, not move too much. About a 3% yield, so not bad. Not bad at all. Target, 10.29 shares. It's been okay, kind of bummy, but that's all right. 15% in terms of share price appreciation, around $184. Does yield around 3% again. I think it's fine from a long-term target. It's not going anywhere. I'll be holding on to them. Tapestry, 3.98 shares. 30.98, I should say. My apologies. I'm up pretty big on this one, no doubt. Around 96% or $659. This one's been a great performer for me, and I'm very happy about it. You know, on top of that, it has a decent yield as well. I'll be holding on to this one for a while. Tesla, 1.3 shares. You know, it's a tiny position. I am up massively on it though too, around 90% from when I bought into it. I'm up big on it, so I'm happy with where it's at. I'll be holding on to it at this point, seeing where it goes. It's only one share. It's a tiny position, but that's okay. Texas Roadhouse, you know, I've been adding to this position. It's a brand new position for me, and I'm really excited about it. Finally got to 10 shares here. I'm not up, you know, not really up anything crazy here, up around 0.8%, but it's a brand new position I'll be holding on to for a while because I'm happy about where they're going. Vici Properties, 52.53 shares. This one's been okay as well, up around $132 or 8.59%. Pays a good 5% yield here, so I'll take whatever I can get on this one. I'll be holding it for a while. They've got quality properties. Walmart, my second largest position, just barely not my largest position, around a $10,300 position here. These shares have gone up massively as of late. It's crazy. 64.49 shares. I've had this one for a long time. It's a massive position here, around $10,300. I'm up 49% or $3,400. This makes up a decent chunk of my actual, you know, all-time gain. So I'm pretty excited about it. And as you can see, you know, as we scroll up here, overall the portfolio itself is up around $29,000 or 26%. Been all right, you know, we'll take it. And that's excluding dividends, so that's worth considering. Then we get into our ETFs. I'm not going to go too much in depth into these, just kind of tell you what I've got. So first one's simple being DES, a small cap dividend ETF there from WisdomTree, 10.2 shares there. The iShares Core S&P 500 ETF, 2.03 shares there. JEPI, you know, I've had this one for a hot minute. I actually like it quite a bit. 47.54 shares there. Great dividend on that one. JEPQ, another great dividend here following the NASDAQ. 23.5 shares here. KBWD, 106.51 shares. That one pays a nice divvy. Reinvest all of that too. It's been pretty good for me in terms of dividend reinvestment. KBWY, both of these two share price have been pretty doo-doo, my worst performing ETFs. But in terms of dividends, I'm actually up on the portfolio, or up on these guys. You know, some just slightly, but hey, not too bad. 79 shares here of KBWY. MGC, the Vanguard Mega Cap ETF, I'm up pretty nice here. 5 shares on this one. QYLD, 50.84 shares, pays a good divvy as well. SCHD, I've got 44.44 shares. My largest ETF holding is going to be them. Up pretty nicely on them too. SPHD, the Invesco High Dividend S&P 500 ETF, 44.64 shares there. SPYD, the High Dividend ETF S&P 500 as well. A different one. This one's from Spider, as you can see by the SPY, 25.05 shares. SPYG, Spider S&P 500 Growth ETF, 17.1 there. VFH, the Vanguard Financial ETF, 10.2. VYM, Vanguard High Dividend Yield ETF, 14.3, similar to SCHD in their makeup. And then XYLD to wrap us up there, 18.3 shares for them. Then we get into our fixed income. As you can see here, we've got about four holdings here in fixed income. A couple of JP Morgan CDs, a 3.2% one, and a 4.25. That's a newer ad. Then after that, we've got a Microsoft bond, actually, a corporate bond. It was only a 2% yielder, but it was trading at a decently cheap price, so that's why I picked it up. It was yielding around 4% at the time. And that actually matures here this month, by the way, that Microsoft one. So $2,000 are going to come into my pocket here on August 8th. So as of next month, you'll see what I do with it. So stay tuned for that. Truist Bank, there's a 5.3% yielder. I may just get a nice high-yielding CD with that. I can't lie to you, with that extra $2,000. It's possible because they're just, man, even, you know, with rates going up too, they're going to be yielding even higher. So I'll be taking a look out. And then I've got about $4,700 in this money market mutual fund, SWVXX, yielding around 4.9% right now. You know, on the most recent 7-day yield. So hey, it's been, you know, all right for me. I can earn that in the meantime on cash that's kind of uninvested. And it's consistent, not going anywhere. Then, before we end this one, we're going to go into the joint account. Nothing massive here. $6,300 in the joint account. How is it comprised? Well, mostly of ETFs, okay? Mostly of ETFs. Apple, 1 share of Apple here, nothing crazy. ABR, only 2 shares. Ford, I've got 3 shares of Ford. 1 share of Meta Platforms, up pretty massively on that one. My best performer, actually, in this portfolio. Microsoft, I've only got 1 share here. Realty Income, 2 shares. And Vici Properties, 2 shares. ETFs make up the majority, I guess, kind of what we got here. Actually, really, I guess it's more based, actually more made up of fixed income, but the largest of what we have is actually going to be ETFs for the most part. We've got DGROW, the iShares Core Dividend Growth ETF, 5 shares there. You got JEPI, 4.14. QYLD, as we talked about, 6 shares here. SCHD, 6.1. SPY, there's just 1 share of SPY that we've recently purchased. SPYD, 2.02 shares. VIG, Vanguard Dividend Appreciation ETF, there's 1 share there. XLF, 6.04 shares on that one. Then we've got, for fixed income, a UMB Bank, 5.3%. Only $1,000 put into this CD, but again, it's 5.3%. I'm pretty happy with that one. On an annual basis, I'll take 5.3% any day of the week, and it's consistent, and it's not going anywhere. Then we actually do have $2,100, $2,190 incredibly snotty out of nowhere in this SWVXX. As we mentioned, this money market fund yielding around 5%. We'll take it. So those are the two portfolios here. We go back to the main, just to briefly graze over the retirement accounts. Um, so in our 401k, about $21,000, as you can see, 21,500, and in the Roth, our bigger one, we are up around we're at $32,700 in the Roth. Again, you max out these Roth contributions as much as you can. We take a look into this one. Sorry for scrolling down on you real quick, but we're up around 1,600 all time on this one. That is the Roth. A brief glimpse overview. We don't talk about it too much, but there you go. We're going to go ahead and talk about dividends we earned in the next video. Stay tuned. I got to blow my nose apparently. Hope you have a great rest of your day.